So AI has come up twice now in both of your businesses. What are your predictions on AI? What do you think the listeners, need to know about it? Um, should we be scared of it? You are listening to the Rich Dad Radio Show, the good news and bad news about money. I am Tyler Jorgenson, and today I'm filling in for Robert Kiyosaki while he is traveling this summer. And I have the honor and the privilege of interviewing our guest today, Tom Rauen. Tom is the founder and owner of 1-800 T-shirts. He's also the co-founder of Dimension Brewing. He's also the co-founder of Shirt Lab. And over the past few years, he has started a pretty powerful real estate investment group called Rauen Capital that raises capital and creates syndicates to buy commercial properties. And so it's been really neat to watch as Tom has built this. But today we're going to go through how he's doing what he's doing, the challenges he faced as he worked through all of this, the good and the bad, and how somehow he runs hundreds of miles while doing all of this. So Tom, welcome out to the show.
Yes, glad to be on.
So, man, we dropped a bunch of things that you do. And so let's go kind of the beginning of your story. How did you get involved into doing T-shirts and with 1-800 T-shirts?
Yes, I started selling T-shirts in high school and then college just as a way to make money. It was, going to the tailgating at the football game and coming up with a design, something that was kind of a hot market topic at the time. And after graduating from college, it just kind of stuck and started producing them for businesses and schools and everything in between.
And so you grew that into a pretty big company. How did you transition from being like self-employed or kind of the small business owner into really turning it into a business where you are the business owner instead of just a self-employed type of an individual there?
Yeah, so I worked my way through like all the cash flow quadrants, and for a long time it was like, I was self-employed just myself, and then it was like, okay, now I've got to start building a team and hiring some people, and that was a pretty easy kind of phase. And then after that, it was like, okay, I can't just be the business owner. I've got to figure out how to be an investor, not just in my business, but in other things as well.
Yeah, and so talk to me about how you did that. So you one, I know that 1-800 T-shirts has gone through some up and down. So let's kind of talk about that first before we get into your investing. What you've overall you guys have a big location, you have a good number of team members, and I think it was maybe around the good old 2020 there where you there were some challenging times. How did you navigate those, and what have you built differently in this round to avoid it again?
Yeah, so we dabbled in some real estate investing well before that. 2012, we bought our first commercial property, and we used our primary business, the t-shirt company, to kind of house hack that commercial property. So we moved into part of it, and then we leased out part of it to another company. And that was kind of our first dipping our toes in the water of getting into commercial real estate. From there, we kept growing it, but it was always still just kind of a side thing, and building just a little bit of a portfolio. In 2020, as a lot of companies did, the t-shirt business took a pretty big hit, and mainly because, sporting events were closed down, trade shows were closed down. All these things were closed down that were a big support of our business. And that was at that time. So the t-shirt business is a complete shambles. But what was still working was the real estate. So we were still getting our monthly, rent checks from our few tenants that we had at the time. And so coming out of the pandemic, I was like, you know what? I cannot let this happen again. We really need to double down on the real estate. So we've got that nest egg. So we've got that passive income coming in, so that if there is a downturn in the operating business of the t-shirt company, we still have, this other stuff happening, and it can actually support the t-shirt business. So they kind of work hand in hand that way.
Yeah, absolutely. So, what was your first, and you did that first investment in 2012, which was really like a way to just own the building that you were running your business in and have some other tenants. So, in 2020, you decide to go into real estate and do more there. What, how did you pick which asset class and how did you start raising capital?
Yeah. So in 2015, we bought our first triple net lease property. And what triple net lease means, if you don't know, is on the commercial side of things, the tenant pays the taxes, the insurance, and all the maintenance. So that those are the three nets. And that asset class, was the best fit for us. Once I figured that out, because I'm a business owner. I'm operating the t-shirt business full time, day to day. I don't have time to be dealing with tenants and toilets and trash and like all this stuff that I'm seeing people, fix and flip. I don't know how to do construction. I didn't have the time and the resources to do anything else. So like we kind of just got forced into this triple net lease space. Then I watched the movie The Founder, McDonald's, right? And so the famous story is like McDonald's, as they started to grow, the CFO said, "We're technically not a hamburger company, we're a real estate company." And I'd met a local investor, and he owned a whole bunch of Dollar Generals and some other national franchises. And this light bulb went off. Like, I didn't realize when I drive down the street and I see McDonald's and Arby's and Starbucks and Burger King and all these restaurants, I just assumed that they were owned by the actual corporate company. But once I realized that they're owned by investors like myself, that was like the path that I wanted to go down, because I wanted to deal with, these great locations, tenants that were paying on time, the first of the month, these long-term leases, 10, 25-year leases. Like, everything about that asset class was like, okay, this is it. And the other part was, as a business owner, I'm used to dealing with business people. So I can walk the walk and talk the talk with those business owners versus, owning an apartment complex. Like, that's dealing with people on a whole different level. So we bought two properties in 2018. And like I said, those were the stabilized properties through 2020 when the business was taking a hit. Like, those first three properties were, generating that cash and the extra income that we needed at that time. So coming out of COVID, 2021, I was like, all right, now it's time to double down. And not only that, it's time to bring other people on and let them in. I feel like this asset class is a big secret, because when you drive down the street, you don't see a for sale sign in front of McDonald's or Arby's or Starbucks ever, because typically these are traded off market, through broker groups, through a lot of different resources, but never a sign in the front yard, really. So I was like, you know what? I've got to bring some other friends and family and other people into this opportunity. And that's when we started putting the syndications together and raising capital and then investing these together with groups.
Yeah. And so, how many, what would you do that year? So 2021, you decide to start, creating a syndicate, raising money, bringing people in. How many properties did you buy that year? Do you remember?
Yeah, we acquired six properties, and it was nearly $20 million in real estate just in 2021. And then we did it again in 2022. So pretty much just back to back years of that. And brought on investors to help with that. And like I said, those tenants are, our first two were two Starbucks, and then we added an Arby's and an Applebee's and a FedEx and a Staples and a Midas Car Care and a couple strip malls that have Papa Murphy's and a nail salon and a few other things in them. So we're just building up this nice diversified portfolio of great assets, great tenants, and in great locations.
So why would somebody who has the resources to invest, right? So they have cash. And now I'm assuming you guys aren't just bringing only investor cash, you're probably raising some equity or some debt as well. But why would somebody invest with round capital into triple net properties instead of just putting it into the S&P 500?
So there's a lot of advantages. Definitely the tax advantages of, so these properties were able to depreciate and use a cost segregation. So a cost segregation study They break down all the components in the property and put them on different schedules on how you can depreciate it, and basically write those things off as losses. And it's a paper loss. So even though we're making money, all the investors get a K1 partnership return that's showing a negative on it, and they're able to offset some of the other income that they're making. So that really takes the returns on this and amplifies it even more than, already double digit returns. And, it's a nice, safe asset class. With the S&P 500, I have no control over the stock market and what's going on there. And the thing that always scared me with that, whether it was my 401k or stuff I had in the stocks, was um, a political thing could change the market regardless of how well that company is doing. And that always scared me, is like, okay, we just lost a lot of money doing that. And with this tried and true core commercial real estate in, cities, it's just solid stuff with great tenants, credit rated tenants, and long term leases, just stabilized stuff. And the cost of building these buildings continues to rise. So the stability of holding that value and continue to go up year after year is something that just has continued to happen, and will continue to happen as inflation does its toll on building supplies and the cost to build these.
How are you picking which properties to go after? How are you underwriting the deals? Are you concerned about certain franchises and the health that of the franchise as a whole, or the businesses? Are you in addition to the real estate, are you looking at the tenant?
Yes, of course. So the nice thing, like one thing we focus on in our hometown, is we know the tenant, we know the neighborhoods, we know the people that are going and supporting those tenants. One of the fun parts of the underwriting is I go to the business, I go to that property, I hang out there for a day, I see how their managers and their employees are treating their customers. If it's a food establishment, I'm eating there and checking it out. I look at their Google reviews, see what kind of traffic and what kind of action is going on in the parking lot, the streets, the neighboring properties, things like that. That's just one of like the basic underwriting things. And then we look at cost per square foot, the lease rate per square foot. Um, we'll look at, we'll try to get their revenue numbers to see, what kind of revenue are they doing compared to other stores, and what is their lease rate ratio to the revenue of the store. That can really tell a lot there. And now with AI, there's a couple apps where you can actually measure the foot traffic in and out of that location. So besides car count of how many cars are driving by that location, you can measure the foot traffic of how many people are going to that location on a daily basis, and then compared to either competitors or other stores in that same geographic location. So one example is right now we're in the process of buying a Staples building, and there's 11 Staples stores in the state of Iowa. And the one that we're looking at is ranked number 2 out of the 11 in the state. So I feel pretty confident about that one. If it was at the bottom and it was number 10 or 11, and Staples is looking at restructuring or maybe closing a few stores, they're going to cut the bottom ones first. So the great thing about the data with AI right now is we're able to look how that store is performing across a state, across the entire market, against the other competitors and a lot of things like that. So it's kind of nice to be able to use that data to our advantage.
Yeah, that's something I didn't even think about with modern with as a leverage of AI in today's market, is the ability to use AI to track foot traffic into retail stores or any stores. Do you also look at the historical, like, okay, is their foot traffic increasing or decreasing? Can you look back in the data?
Yeah, so we can look historically, where that's at, and then also historically, how that store's been. If they've been there and they're like a neighborhood staple for the last 10 or 20 years, they're pretty much ingrained in that, community and stuff like that. So we like stores that have been there for a while and have that footprint versus a brand new build, because the brand new build, they're still trying to establish their foothold, and you just don't know how that's going to perform maybe against some existing stores that are already there.
It makes a lot of sense. Again, really a neat way to use AI and as part of your deal flow and deal evaluating. Let's take a quick break, and when we'll come back, we'll be talking with Tom Rauen more about commercial real estate investing and the cash flow quadrant. And we're also going to talk a little bit about how he runs ultra marathons and how those things and that same discipline of endurance can, also applies into investing.
Have you heard about the expanding influence of BRICS, Brazil, Russia, India, China, and South Africa, and its potential to severely impact the US dollar by possibly creating a new world currency? Even JP Morgan said, and I'm paraphrasing, the impact of BRICS would most likely be felt here in the US, where moving away from the dollar would cause our financial assets like our IRAs and 401ks to lose value. We agree with JP Morgan and many others. Now's the time to position yourself for stability, security, and wealth protection. So take it from Robert and me, whether you're a seasoned investor or just starting, we believe that gold should be a part of everyone's portfolio. Seize the opportunity to ensure your financial future with gold and do it with one of the best in the industry, Allegiance Gold. Allegiance Gold has done things right from the beginning, having earned 5 stars with TrustLink and an A+ with the Better Business Bureau. Allegiance Gold can help protect your IRA or 401k with physical gold and silver, or you can have it delivered securely to your doorstep. Get up to $5,000 in free silver on a qualifying investment when you visit protectwithrobert.com today. Or you can call 844-3-ROBERT. That's 844-3-ROBERT. Hi everyone, I'm Kim Kiyosaki. Thank you for being with us today. As CEO and co-founder of the Rich Dad Company, I can assure you, Robert and I are both dedicated to our Rich Dad mission to elevate the financial well-being of humanity. And you are the humanity. We truly want you to succeed. When you succeed, we all succeed, and our mission grows stronger. With that in mind, I'm excited to extend a personal invitation to you to elevate your financial well-being by attending our exclusive free online wealth building event hosted by Robert. You'll learn what to focus on first to start increasing your cash flow immediately. You can reserve your seat right now by going to richdadonline.com. Just go to richdadonline.com. The event is 100% free and will help you achieve your financial goals.
Welcome back to the Rich Dad Radio Show, the good news and bad news about money. I am your host, Tyler Jorgenson, filling in for Robert Kiyosaki while he travels for the summer. And we're going to continue talking here with Tom Rauen about commercial investing, about being a business owner, about the challenges there, and also about how you can apply some of these things that he's talking about into moving yourself through the cash flow quadrant. So, Tom, I teased a little bit about the fact that you run ultra races and endurance races in the previous thing. Tell us a little bit about that and explain how that ties into being a business owner and being an investor.
Yeah, so about 10 years ago, I started running 5Ks, and then that progressed to marathons. And then I discovered trail running and learned that there's 1,500-mile races. And I thought that was absolutely insane. But I learned to fall in love with it, and the discipline that goes with it and the training and everything else at 5 a.m. when I'm up running and training for these races. That's when I kind of clear my head and release some stress and everything else and get my day planned. But everything I've learned from that, when you go through a 100-mile race, there is a lot that happens. It's very unpredictable. So no matter how much you prepared ahead of time, once you reach that starting line, you just don't know what's going to happen over the course of that race. Everything you plan, there's going to be hurdles in your way. There's going to be bumps along the road. There's going to be all sorts of things thrown at you. So really, it's taught me to, think on my feet, to have that self-discipline, to have patience, to, prepare as much as possible, but be ready for when something happens unexpected. And to, be able to just take it head on and keep moving forward and not let something totally cripple you and just like knock you down and set you back. So yeah, it's had a lot of lot of just parallels to everything that I do in life. And it's been a lot of fun on the journey.
Awesome. And so, Tom, you just as a recap for listeners here, you own Round Capital, where you raise capital and invest in triple net properties. You also are the founder and owner of 1-800 T-shirts, which is a huge T-shirt and apparel production company. Are you a pretty regional business? Are you national? How do you approach attacking markets?
Yeah. So on the t-shirt business, we're nationwide. We're printing and shipping t-shirts all over the United States. With the real estate, currently we're in Iowa, Wisconsin, Illinois. But after being in 3 states, I've realized that there's a lot of extra complications once you start investing out of state and adding more states to the mix. You got to pay attention to the different taxes and property taxes and any other, rules and regulations of that particular state. So right now we've really dialed in and we focused our niche on the state of Iowa. And so we are the commercial real estate guys in the state of Iowa. And that is our niche. We understand that whether you're investing in a Starbucks or an Arby's in Iowa or New York or Arizona or Florida, they're all really similar deals. But on the back end, like, I just want to keep things as simple as possible. And by just focusing on the state of Iowa, like, we know when we're working with brokers and anyone else, like, we're the Iowa guys. The other great thing about the state of Iowa is a lot of people don't even know where it's at. We're often overlooked, and which is great because that's less competition for me, right?
Sure.
We know it very well. I feel very comfortable. I know the people that are living here in these communities, how they operate, and the businesses and stuff like that. So I love being the Iowa guy. So when these brokers come up, the brokers have a lot of clients, right? And you want to be the first person they call. Well, typically a broker, the first person they call is going to be like the guy that has the most money. I don't have the most money, but if I know the most brokers and they know I am bar none the guy to call in Iowa, that's going to pop up in their head, and they might call me because the guy with the most money doesn't want to invest it in Iowa because he doesn't know Iowa. So I like niching down and being very focused. So triple net lease, national tenants, state of Iowa. I'm not trying to do a lot of things. I'm never doing multifamily. I'm not trying to get out into other asset classes or doing fix and flip or anything else. It's basically real simple, triple net lease, national tenants, state of Iowa.
I can personally validate and vouch for the fact that you are the guy in Iowa. Tom and I were lucky enough to go to the Field of Dreams game, the first one, and walking around there with him, it was like everybody just knew you. They even have a nickname for you. I'm blanking on what do they call you? It was like your high school nickname.
Tom Squad.
Tom Squad. And it's like everyone knew Tom Squad, and it was the coolest thing. And I think that's brilliant to leverage that into this next stage of what you're raising and doing. Is like people know, they can clearly say, oh, Tom's the guy for triple net leases in Iowa. Like, it's really smart to niche down and own that space. You also, we mentioned earlier, you're a part owner in a brewery, and you've got a few other investments and things out there. You also are really clever at unique types of marketing, and I think it would be I would be remiss if I didn't bring some of that up. So you've held a Guinness Book of World Record at one point, but you take a really unique approach to marketing. Do you do any of that? Like, I'd love for you to touch on that a little bit. And do you do any of that in the, kind of more professional side of things here with Round Capital?
Yeah. So the unique marketing things I do, so whether it was freezing a t-shirt in negative 40 degrees temperature, or coming up with the Pope bracket, which was an NCAA style bracket when the Pope was getting picked, we put all the Cardinals in that, or breaking a Guinness World Record for wearing 247 t-shirts at one time. it's all about being creative and getting attention. And we can translate that into real estate as well. So I'm able to look at a property that's maybe been on the market for a long time, and a lot of people are driving past it or looking past that listing. But I'm able to look at it with a different set of eyes from a creative side and say, okay, this is what's currently there. Is there something else that we can do with that property? Is there something we can do, whether it's the landscaping or the facade or something else, to maybe restructure that property, or maybe it's just changed the property completely and it's got a different or better use for it, or a better tenant that's going to produce more cash flow for it. So I think having that creative side of my brain look at these properties, I'm able to uncover some deals that other people probably overlook. And then on the marketing side of it, the properties, when we look at it, whether it's signage, just that curb appeal, everything else, like how do you get more traffic and more eyeballs to the property, help those tenants out, maybe get new tenants in there. So we use all of those aspects in the real estate to continue to grow the value of those properties.
Yeah, and I think your ability to problem solve and really approach things with a creative eye is benefits all of the businesses you work in. And with 1-800 T-shirts, that kind of being your main company, the company that you've grown, I believe you guys are on the Inc. 5000 list now. Pretty amazing stuff. What are you doing in the business now to stay ahead of the there's a lot of people that there's always new guys printing shirts from their garage. There's always new guys doing drop shipping. What are you doing to stay competitive and continue to grow?
Yeah, so we're just always looking at what is that next thing. And right now it's called direct to film printing. So we're able to do full color prints, lower quantities, and really speed up the turnaround time. So we're able to, print and ship within a few hours in some cases, or a couple days, where it used to take quite a bit longer to get an order through the system. So really just reinvesting in the technology, working with AI on how we can, take our artwork to another level and really just deliver a better and easier customer experience.
So AI has come up twice now in both of your businesses. What are your predictions on AI? What do you think the listeners need to know about it? Should we be scared of it?
No, definitely don't be scared of it. But I think everyone should be familiar with it. It's going to be coming fast. It's going to be progressing very fast and really taking over a lot of things that we do just in our day-to-day lives. And when I say taking over, I don't mean disrupting everything, but really just used as a tool to make things easier, more efficient, and eliminate some of the things that were just boring and mundane. And that goes for jobs too. If it's a boring, mundane job that's just repetitive, and a computer can replace that, that's great. That gives us more time to live and experience different things and to go out and run 100-mile races and travel, and do other stuff. So I think everyone should definitely do not ignore it. Be familiar with it. And the more you can learn on how that can help enhance what you're currently doing, the better you're going to be.
As you're growing Round Capital, you guys have raised, how many properties do you guys have now in your portfolio?
We have 20 properties right now.
Pretty epic. What are the goals for the next couple of years?
Just to keep growing it. So with the change in interest rates in the market over the last 18 months, we've really tightened up our buy box and gotten pretty specific on the types of properties that we're acquiring, all the returns and everything else. So we don't have a specific number goal that we're shooting for or a certain number of properties, but really just being patient, finding the right properties and, making those happen. So really the goal is be patient, find the home runs, find the ones that other people maybe are overlooking, and continue to build the relationships with current property owners. So we're first in line when they're ready to sell, and also continue to build relationships with investors. So as we grow our investor pool, we've got the capital ready to deploy when these deals come along.
If somebody is interested in becoming an investor and they're starting to look at different syndicates, what should they look for? And in addition to what should they look for across the board, what are your minimums, and who are the type of people you're hoping come and join your investor pool?
Yeah, so the minimums really depend on the type of deal. For us, it's 25,000 or 50,000, depending on the deal. And we're looking for business owners, high net worth, W-2 owners that are looking to get out of the rat race, that are looking for that passive income. Maybe they don't want to learn all the ins and outs of investing on their own, but they want to do it with a group, and they want to also do as part of a community. And so I think when you're looking at various syndicators, you want to get a feeling for, are they doing it as a transaction and you're just part of another number in the cog of the whole thing? Or are they building a community and a group and something more than just the dollars and numbers of investing? And so we're looking at, how can we build that community? How can we introduce and make connections among investors where maybe they've got other businesses that they're doing, that those connections can, foster other relationships and things for them as well. And then, there's the experience and the travel aspect of it, getting together, having dinners, going to a baseball game together, and really just experiencing life together and winning together. That was always the thing with the stock market that I thought was boring, was like, you just put your money there and then it's there, and it may go up, it may go down, but there was nothing more to the experience. And with real estate, I'm like, we can make this fun, we can make it enjoyable, and we can make the whole investor experience much more than just dollars and cents and putting money somewhere and watching it go up.
If people are interested in connecting with you, learning more about you, where do they go?
Yes, you can go to roundcapital.com, or you can follow us on Instagram at Fast Food Landlord.
I love it. Tom, thank you so much for coming on the show. For all of our listeners here on Rich Dad Radio, we're so grateful that you are listening. We know that you're excited to have Robert back as he returns from summer travels. My name is Tyler Jorgenson. I'm the founder and CEO of For Sale Digital Marketing, and we run Burn Media, where if you are interested in having a show just like this, where you want to get your expertise and your message out to the world, we help you do that. So you can check that out at burnmedia.co. Thank you for listening to the Rich Dad Radio Show.
This podcast is a presentation of Rich Dad Media Network.